What are the red flags around nickel? What do companies need to have or need not to have in place? Because not all nickel stories will work out. They're not all going to be economic. So what do you look out for?
As investors are looking at opportunities, is you want to look at, is it of a scale that's going to attract the big guys who are going to write the big checks? They're going to make you as an investor a lot of money. And again, if something's been around for 30 or 40 years, unless there's a really new take on it, again, the majors probably looked at it 10 years ago and 20 years ago and 30 years ago, and they didn't buy it then.
Hello and welcome to Crux Investor. We managed to catch up earlier today with Mark Selby. He's the CEO of Canada Nickel, and following on from his series last year, 2019, talking about investing in nickel, he talks to us today about Class 1 and Class 2 nickel and the importance of it and the movement towards intermediate nickel. We also discuss sulphides and laterites and the importance or not of those in the mix, and we discuss HPAL once more, plus a variety of other topics. Look in the description below, and if you click on the timestamp against that topic, you can go to that part of the video. And if I could ask that you click the button in the corner of the screen to subscribe to our YouTube channel. And of course, you want to see more videos in this series and some of the videos that Mark did with us at the end of last year, please click the notification bell. Anyway, let's hear what Mark had to say. Hi Mark, how are you?
Hey Matthew, very good. Happy New Year, Happy New Decade.
Yeah, Happy New Year, Happy New Decade. I know, older and wiser, right?
Yeah, well, older anyways.
Yeah.
So we'll see.
Just want to say thank you very much for the piece you did last year, end of last year. We've had amazing feedback on that because it's helped clarify and expand people's understanding of the nickel markets, and thanks for that. And you're probably seeing lots of different pieces of that now going out to the market too, so appreciate that. One thing we didn't cover though was this Class 1, Class 2 debate. We said we'd talk about it a little bit further, so you kindly said yes to speak today. So why don't we kick off? What is Class 1? What is Class 2?
Yes, so Class 1 and Class 2 refers to the type of nickel product that gets produced. So a Class 1 nickel tends to be LME deliverable and meet a purity standard of 99.8% or better. It gets used, you need it in applications like alloys, alloy steels, plating products, and then increasingly, that purity of nickel will be required for nickel sulphate into cars. But again, the key is the product. It doesn't necessarily have anything to do with where it comes from. And I think that's one of the places where people get trapped up. Class 2 basically is a nickel containing product that's less than 99%. That can still be used by a consumer, and it doesn't have a terminal market. So the issue with that is with an LME deliverable product, if you can't sell it to a customer, you can always drop it off at the LME and get the LME price that day for your product.
Right.
Class 2 has to go, to a consumer, and so those products tend to have much more volatile premiums than because there's not this terminal market like you have.
So what do you mean by consumer? Because again, terminology in the industry is different. So
sure. Yeah. So generally, Class 2 gets used in stainless steel and alloy steel applications where those processes have a robust refining step in the process, so they can take materials that are less pure, or they're quite happy to have the iron that comes along with ferronickel because they need to iron to make stainless steel or make an alloy steel anyway.
Got it. So now we understand what they are. There's a lot of conversation online, and I think you alluded to the fact that perhaps people shouldn't be expending as much energy worrying about whether it's Class 1 or Class 2. Why do you think people are concerned, first of all?
Yeah, I think where it's come down to is yes, we will need lots of new nickel to make nickel sulphate batteries, and the nickel that needs to go into that nickel sulphate or the nickel sulphate that comes of it has to have a very high nickel purity to it. But that does not, that is true. But where people get tied up is they then project that all the way back to that. Okay, these types of deposits are only good for this type of application.
Right.
At the end of the day, there's basically three types of nickel sources. There's limonite ore, there's saprolite ore, and then there's nickel sulphide ore. Limonite is what goes into the HPAL stream typically. Mm-hmm. Saprolite is what is used to make ferronickel and NPI. And then most sulfide ores, they make a nickel concentrate, and that, then gets smelted and refined. The key piece of it is that, each of those steps makes an intermediate product, which can be smelted or refined into a whole range. It happens today, and it will happen even more so in the future because, we're going to need a lot more nickel sulphate. So the Chinese are going to build way more capacity than the market needs, just like they do for every other product. And so, so there will be all this capacity to take a HPAL intermediate, to take a pyroferronickel intermediate matte, or take sulfide concentrate and turn it into 99.9% metal, turn it into high purity nickel sulfate, turn it into ferronickel if they need to. Again, there's you need to completely decouple the ore source discussion from the end product discussion.
Right. Okay. So when I'm reading about people having discussions, debates, sometimes heated online about, I won't invest in laterites, I'll only invest in sulphides. What you're saying is it doesn't matter.
Yes, it does not matter.
Okay.
There are today more natural homes, and today nickel sulfide processing has actually been a bit of an oligopoly between the very small number of nickel smelters that exist. But the Chinese will build lots of capacity. Again, I've talked about, real world examples in the cobalt space. In 2003, China was 3% of finished cobalt production. Right. In 3 years, they were 30% of production, and in 5 years, they were 50% of production. And that was taking basically intermediates and bags of dirt, sometimes dug by children in the Congo, and turning it into a usable cobalt product. It was cobalt. It was a various range of cobalt salts. And again, people get all excited about this nickel sulfate premium. Well, in the cobalt market, because there's so much capacity to make salts in China, salts tend to trade at a discount to the metal, not a premium.
Interesting.
So, yeah. So again, it's very, people, that's the frustrating part for me, is there's been so much airtime on this class 1 versus class 2. And there's some really bad, to me, sort of pieces of thinking that happen and get people distracted. What I think is the real issue is, we need to make sure we have enough nickel units, period, to meet the growth for stainless steel and to meet the growth for electric vehicles going forward.
That's fantastic. That's helped me understand it, certainly. So, there has been in the past discussions about premiums, on one versus the other, but you're saying the way the market's setting itself up means that that's going to take that issue away as a concern. Yeah. And part of the reason it got some traction was about 18 months ago, 2 years ago. Yes, nickel sulfate prices at that time were trading at about a $2,000 a ton premium to metal in China, because, again, you had the surge in demand that started, and the supply just hadn't a chance to get going. Today, nickel sulfate premiums, or recently, I haven't looked, this week, but nickel sulfate premiums in China were zero. So the key, and that's where I encourage investors is don't get caught up if something's trading at a short-term very high premium or a short-term big discount. Don't extrapolate 3 months or 6 months and say that's the long-term sustainable value for that premium discount. Well, hence talking to people like you who've kind of been through a couple of cycles of understand the machinations of the sector. So I appreciate that. Can we talk about HPAL? We've had so many people come back about your comment around HPAL, okay? Because some companies set themselves up and say, we're HPAL ready, to use a term. And you made a comment to us and saying, that the cheapest, the only, and therefore the cheapest builder of a HPAL plant, it's cost them over $1 billion. So anyone that's telling you it will cost them less to build than that, they need to have a pretty good reason as to how they justify that going forward, right? So that obviously impacts on what some companies, a handful of companies, are saying to the market at the moment. So it's quite a big statement from you, and people have asked, where's your certainty come from? Why are you so confident that going forward people aren't going to be able to deliver a HPAL project cheaper than, say, $1 billion?
Sure. Okay. Yeah, so where that comes to is sort of 40. Think about it as sort of $40,000 per ton of installed capacity. So that's the only company that has successfully done 2 HPAL plants is Sumitomo Metal Mining, and their costs to build those plants were between $30,000 and $40,000 per ton of capacity, just to make an intermediate product that they shipped to their existing refinery in Japan. So they're not going all the way to a pure nickel sulphate or pure metal or pure briquette, which is just additional costs that have to be built into it. So this is the best case performer, number one. Number two, they're building these in the Philippines, which is about, lots of companies build modules in the Philippines because the construction work there is the highest productivity, lowest cost place in the world to build those things. So, again, relative to Australia, relative to Europe, relative to Canada, the Philippines, is a very low cost place to, build these type of operations. So, unless the operation has higher grade than the operations that Sumitomo Metal Mining have built, which is in the 1.3 to 1.4% range, and the reason they built those ones is that the grade was pretty good. Two, unless it's in a place that's cheaper to build stuff than the Philippines, then or that they have way more infrastructure. That might be one thing that may exist in some places, right, relative to where Sumitomo Metal Mining built their operations, but that's what you need to ask yourself to say, okay, do I believe this company's capital cost number or not?
Okay, that's fair enough. So look, what you've said to me, what I've heard there is that don't worry about class 1 or class 2. There's an intermediate solution, which is going to be coming into the market. It's coming thick and fast. And you're saying worry about nickel units. There's not going to be enough nickel to cope with the demand for nickel. So that's a selling message. I want to help retail investors understand what are the red flags. So there's a lot of, come on, mining's mining. People go around, there's promoters and brokers and intermediaries, and they all go and loudly trumpet their story around the marketplace, and it's not always true, and it doesn't always come to be. So what are the red flags around nickel? What do companies need to have or need not to have in place? Because not all nickel stories will work out. They're not all going to be economic. So what do you look out for as an investor?
Yeah. So as an investor, so I think that the key thing is one is scale and grade. You need, ideally, if you've got both, those are fantastic. But
so what does scale mean? What do you mean by scale? What do you mean by scale?
That you can produce a sizable amount of nickel, for a reasonable period of time, say, 20 to 30,000 tons minimum for at least, 10 to 20 years. That very quickly gets rid of a bunch of, potential opportunities. You need to have, because again, there are the rare project that has an extremely low capital cost, but at the end of the day, there's a chunky enough, amount of capital that's required to get into these operations. Yeah. Now, if the grade's high enough, you can get away with a smaller operation. Right. So that's the thing that you need to look at. So if you have both, so things like Nova Bollinger, when it was just, that's why it got acquired for $1.5 billion. Right. That's why Voisey's Bay was acquired for $5 billion, because it's a big deposit that had very high grade.
So let's talk about grade. So let's help. You did cover off the previous discussion. Talk about grade. What is low grade? What's okay? And what's high?
Yeah. So again, you'd have to split that between underground and open pit. Okay. So for underground, 2 to 3% plus would be high grade. Anything less than that would be low grade. Mm-hmm. For open pit, high grade would be anywhere from kind of 0.7 to 1%. Again, depends on the strip ratio. Mm-hmm. And anything lower than that would be lower grade.
Right. But lower grade can work if there's enough scale to it.
Enough scale to make it work, which is what Dumont and then what we have at Crawford. That's the key there. Is they're just very, very large deposits in places with lots of infrastructure. Right. So,
okay. And what else makes you nervous? So you got scale, you got grade. What else is there?
Yeah. So that in terms of the nature of the deposits, one. The other part in terms of just two, the location of the project. So, again, political risk and infrastructure, right? Again, it's much easier and faster to build a mine if all the infrastructure you need to build it is actually already in place. So there's a lot of locations that are very remote that you have to spend money and time building the infrastructure before you can then start building the mine. So that's where you look at big copper projects in the Andes. They cost $3 to $4 billion because you have to spend $1 or $2 billion for all the infrastructure, and then you spend another $1 or $2 billion to build the plant. In places where there's infrastructure in place. So that's the benefit of something like Dumont. And then what we have at Crawford is all the infrastructure is already in place. So you can just build the plant and the mill and get going.
Okay, without promoting your own company too much, just more generally, what do you think investors, when they're looking at the nickel market, when they're hearing this EV story, what else should they be looking to avoid or look for?
Yeah, so again, I think, the market today is still tough for exploration and development stories. You really do, like, where you're getting the premium valuations, if you look at some of the companies in copper and gold in Colombia and Ecuador, is that they have the scale that will attract them, that the majors are willing to bid for, right? So they're really breaking out as a value category. So again, I think, as investors are looking at opportunities, is you want to look at, is it of a scale that's going to attract the big guys who are going to write the big checks? They're going to make you as an investor a lot of money, right? So that's that's, I think, key as you're looking at opportunities. And again, if something's been around for 30 or 40 years, unless there's a really new take on it, again, the majors probably looked at it 10 years ago and 20 years ago and 30 years ago, and they didn't buy it then. So unless there's a really compelling reason why they should buy it now, they're really probably not gonna get there. So that would be number one. And then number two, again, I think there's low capital, very quick kind of restarts, brownfield things that, again, there was a track record of production. You don't have to worry about will the mine work. It's worked a bunch of times before. Right. And again, with the right team that has the experience to actually deliver it and has delivered it in the past, then that's enough, because they can generally get to free cash flow, and use that to build a business as well. So those to me are the real two paths to take a look at.
That's really interesting. We've spoken to a few gold companies, a few silver companies, even a uranium company who are employing that model. So you've got to have a team who've kind of been there and done it before, as in the case of all of these individuals, but they're looking to get into production early.
One other thing that again, in terms of this class 1, class 2, and then really around nickel sulfate, and I think investors need to be careful about is, there's a lot of talk about, we're just going to make nickel sulfate. I think there's a couple important characteristics of nickel sulfate that people really need to be conscious of. So, nickel sulfate, you take a product even that's only 22% nickel. Mm-hmm. So, a lot of producers are taking a pure product and then making sulfate, which is a 22% product, or even most nickel intermediates have a nickel content that's higher than 22%. So you're downgrading the nickel content, mm-hmm. and what you're shipping is a bunch of sulfate molecules and some water. And so do you really want to do that 4,000 miles away from your nearest customer? Right? So because all you're doing is adding a whole pile of costs to transport that material, to the battery consumer.
Okay, so you're saying
so it's better to ship the intermediate closer to the market and then process it close to where it's going.
Got it. So sulfides are not necessarily as cost efficient as people may say. You need the all-in cost, as it were.
Yes, exactly. Yeah, because and so the other part of it too is that when you make nickel sulfate, one of the biggest cost components is to take the sulfate molecules that are in solution and dry out the solution so that you crystallize it. So that requires a lot of energy. And again, in a lot of locations, energy is not cheap, particularly because the first step that when you send it to the person who's going to upgrade it and turn it into a usable battery product, they dissolve it again. So in terms of the overall value chain, it's a pretty stupid process to crystallize it, ship it, and then redissolve it again. I mean, that's what nickel pig iron integrated stainless steel was all about. They used to make ferronickel, they'd cool it, they'd ship it, and the first thing, the stainless steel plant was melted again, right? Yeah. So, the Chinese said, oh, that's stupid, and so I think you're going to see the same thing happen in the EV space. A lot of the downstream players are going to find way, and I know because we had discussions with them when I was at RNC, they're going to look for ways to build a front end onto their plant so they can take a nickel intermediate directly into their plant,
right,
dissolve it once, and make a final product that goes to the battery maker, car consumer, who or however far down integrated they are. The only time it really makes sense to make sulfate is if you're already getting it into solution. So as in an HPAL project, if you've leached it, you haven't built your plant yet to make it a high grade product. In that case, maybe if you're close enough to somebody, it might make sense to make sulfate rather than a pure product. But the other piece these companies are all going to deal with is that, the purity restrictions on nickel sulfate are going to get stricter and stricter because, all the car companies want to use more nickel because that's what gives it the energy density, which gives it the range.
Right.
The problem is the nickel is also the thing that makes the battery, in combination with a couple other things, catch fire.
Combustible, yeah.
So they're pretty concerned about catching fire. And so they have a bunch of systems to help make sure that doesn't happen. Well, if you have random, iron atoms or cobalt atoms or copper atoms or other elements that are in the product, that complicates things. So, as we go from 33% nickel to 50%, 60, 80, 90%, 95% nickel, they want stuff that is as pure as possible into the process. And so, do you as a mining company want to continue to invest to be able to meet the increasing quality standards that are going to exist going forward? And I think the answer to that is no. So, So again, unless there's so Terra Fama in Finland, they leach sulphide ore and make a product, and they were shipping an intermediate. So for them to make a nickel sulfate plant to supply battery manufacturers in Europe, excellent idea, right? And so they've already got a very complicated chemical plant. Making a chemical product out of a complicated chemical plant, is okay because you need that expertise. So for that scenario, that made sense. But there's literally tens of other things that I've heard of that just make zero sense to me. And again, to underscore with real world, not just Mark Selby's opinion about stuff, Glencore runs Mern. It's a pressure acid leach plant. It would be, it's an option for them. And Glencore hasn't talked about making nickel sulfate directly. They're quite happy to ship 99.8% briquettes to the end consumer who pays them the premium for the briquette, and then they don't have to worry about the rest of the downstream process. So.
It's I'm going to pick you up at a later date when you talk about when you see things or companies that worry you. And I won't necessarily won't get you to name names, but I want to understand more about those. But Mark, thank you very much for going through that with us, and we've been reading with interest, people's responses to your last piece. Thanks for that, and thank you for today. Stay in touch. We should catch up soon about Canada nickel, because when's that actually going to hit the market? You're going public?
Yeah, we're in the final stretches of the regulatory approvals.
Yeah. That's always
we
fun.
Should be. So yeah, we should be. We're looking hopefully by the end of next week.
Okay, soon.
In a position to do that. So yeah, we're in the final stretches there. So next week or the week after, and again, we still need the very final blessings from the regulators, but we're making good progress on that front. So
okay.
So hopefully sooner than later. So
well, we'll look out for I'm sure there'll be a press release on it, but people will be able to start trading Canada nickel in the next couple of weeks by the sounds of it.
Yep. No, it'll be a very exciting point in time.
Well, come and give us an update. Sounds like a great project. Love to hear more. And again, thank you very much for your insight. Beautiful.
No, thank you, Matthew. Glad to talk about nickel.